Today is Monday, January 10th, and this is the ADM Investor Services weekly market kickoff. Please note that the views and opinions expressed here today are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or ADM. Today's guests are Steve Freed, ADMIS Vice President of Grain Research, and Alan Bush, ADM Investor Services Senior Financial Economist. Steve, starting with the grain markets this morning, we've got nearby soybean futures trading over $14. Corn over $6, and KC wheat below $7.80. Will these trends in the grain markets continue?
I think long term they will. This is a weather market. Weather market can be extremely choppy and volatile, but I think that while there's a chance of rain a week from now in some of the dry areas of South America, our weather guy doesn't see a pattern change. So there might be some irreversible damage done to the Brazil and Argentina corn crops, and Paraguay, Brazil, southern Brazil, and Argentina soybean crops. So I think that will continue to trend higher. Historically, after this USDA report, we tend to trend a little bit lower into February, make some February lows, and then rally at least into April. So I think that we will continue to trend higher because of South American weather.
What about the wheat market, Steve? Below $7.80, what does that market look like?
Well, it's bearish. I mean, southern hemisphere wheat crops are higher. U.S. exports are not competitive until at least March for export demand. We think that on Wednesday, the USDA is going to show a little bit higher winter wheat acres numbers. So we've taken a lot of weather premium from last year out of the marketplace. But I think we're getting close to support because I think that our weather guy continues to see a dry spring for the southern plains hard red winter wheat areas.
Steve, you mentioned the USDA report this week. What do you think the USDA report will say, and what will the market impact be?
Well, I thought many people thought it'd be a bearish report with USDA lowering bean and wheat exports and maybe raising the corn crop here in the U.S. from last year. But now, with the South American weather, they may just punt and keep a lot of the numbers the same. When you look at the average trade guess, they have U.S. corn, bean, and wheat carryouts about the same as they were in December. We might, as I said earlier, get a little bit higher wheat acres. So I think this report, a lot of people, especially end users, would like to see a bearish report so they could buy it going into 2022.
Finally, Steve, looking at inflation, will inflation help grain prices? And the second part of the question, will inflation hurt food and fuel demand?
When I first started in this business many years ago, there wasn't a lot of the tools right now to trade inflation. So when inflation kind of peaked or started working higher, people bought soybeans. And so I think we're seeing a little bit of buying of commodities because of inflation and whatever the Fed does as far as raising rates and things of that nature. The index funds almost have a record long position in our grain room, and that position of being always long is a position hedging against inflation. So I think inflation will be positive to the futures market. As far as the other markets, there is some concern that higher prices will begin to lower food demand. Our livestock analyst says it clearly sees people going away from buying choice beef cuts to hamburger. And also you're seeing some restaurants closing down. And so that higher price, job shortages, things of that nature could actually slow demand for food here in the United States.
Thanks, Steve. Alan, Federal Reserve Chairman Powell will testify tomorrow before a Senate committee. What do you think he'll say?
Well, I think what he is likely to say will be consistent with what the Fed recently said about potentially raising interest rates in March and the increased pace of scaling back on their asset purchases. So traders right now think that his comments will be on balance hawkish, as they have been. I think that's one reason why we are seeing some pressure in the stock index futures and also some strength in the dollar index. So I think between now and when he does testify, and that'll be at 9 o'clock Central Time tomorrow, the dollar index will probably remain firm.
Let's to the stock market. Continuing to trade here at near record highs. Alan, what's your outlook for the stock index futures?
Well, the short-term outlook looks sideways to lower as traders focus on Fed policy and central bank policies elsewhere around the world. So that seems to be dominating. As you can see, stock index futures lower today. But I think longer term that even with rate hikes from some central banks, that interest rates globally will still be low enough to sustain a bull market, just not today as so much attention and so much media is focusing on the Fed. But when you think about it, rates are really not that much off the lows. And I think we will need substantially higher rates before this bull market is over. So once again, near term, maybe some pressure on all of the rhetoric on hawkish Fed policies. But longer term, I don't think it's going to be enough to reverse the bull market in the indices.
Lastly, Alan, looking at the currency markets, do you see the British pound continuing to advance against the U.S. dollar?
Yes, I do. In fact, we did see a new 2-month high in the pound against the dollar index today. Since then, the pound has backed off a little bit. The reason is for my bullishness on the pound is that the Bank of England is very much likely to be as hawkish as the Fed. In fact, the next Bank of England meeting is scheduled for February. Of course, that's before the Fed meeting in March. So the Bank of England likely to raise rates ahead of the Fed. So I think that prospect, plus the probability of more hikes from the Bank of England, maybe as many as 4 hikes this year, should sustain the bull market in the pound. So any breaks in the British pound should be used as buying opportunities.
Thank you both. Remember, the views and opinions expressed today on this video are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or ADM. If you'd like more information about our brokerage services, would like to speak to one of our experts about managing your risks, or would like to open a trading account, please visit www.admis.com.